This is not an easy topic, but I've been helping a lot of clients lately to restructure their debt. And I thought other people might find value in some of these stories. Now, the topic of debt can be emotional, it can feel overwhelming, it can be embarrassing. And I just want you to know that you're not alone. And there are some different tools that we have access to that can drastically improve your financial situation. Now, it doesn't work for everybody. There's not a perfect solution for every situation, but the tools exist and this is what we do. So let me just share 3 examples of clients where it did work out recently. Now, client number 1 had a death in the family, some unexpected funeral expenses, and they were carrying some other debt, and it was just getting uncomfortable. So we had them approved for up to $188,000 before we even got off the phone using our instant approval HELOC loan. Now they only needed $60,000. That was enough to wipe out over $1,500 of monthly payments, and we replaced it with the new 15-year fixed loan at $622 a month. The cool part is they had their money in 9 days, which it could have been as fast as 5 days if they would have signed a little bit faster. But this type of loan gets done super quickly. Now it does have a higher interest rate. This one was in the 9s, but it's a second mortgage program, so you don't have to redo your first mortgage if you have a super low rate that you don't want to mess with. So, all right, client number 2 did have a super low rate, 3.625 on their mortgage and a low monthly payment. But when we added up the credit card bills, it was over $1,200 a month at an average interest rate of around 25%. So on a blended basis, they were actually paying more than 8.5% interest on all their debt combined. So in this case, the right solution was an FHA cash out refinance where we took basically 10 monthly bills and now they only have one, and it's at 5.75 interest, saving them $858 a month. The cool part about this is in their case, they didn't need the extra $858 a month of cash flow. They weren't struggling to make their bills. So what they're planning on doing is keeping their monthly budget exactly the same, meaning put that extra $858 towards principal reduction payments. And they're on track to be debt free in just over 9 years with the exact same monthly budget that they were in. That's life changing. Client number 3 had her house paid off free and clear, but she was living paycheck to paycheck basically on Social Security and had no money to do anything extra, help her daughter or whatever she wanted to do. And so in her case, she was 74, which I bring up just because being 62 or older made her eligible for a reverse mortgage. And in her case, that got her access to a $94,000 line of credit without having to sell the house or move out or even have a monthly payment. So what she did with a little bit of the money was to pay off her existing debts, saving $567 a month, which right there helped her to feel a lot better about her finances. But it also gave her access to the rest of the money as a line of credit that she can draw from at any time. She can stay in the house as long as she wants, and she'll never have to make a mortgage payment. Now, one more thing I want to talk about, because a lot of people ask us this question is now the right time? With rates moving every day, I mean, the truth is mortgage rates, the mortgage bond market looks just like the stock market. It's up and down every day throughout the day, and it's really hard to predict. Now, my team subscribes to all kinds of services. We pay a lot of money to have up to the minute bond market information. We listen to the commentary, we watch videos, we're reading all the time, and we try to stay on top of this in order to advise our clients the best way that we can. Now, back in September, right before the Fed started cutting interest rates, there was a 6-day window where we were locking in mortgage rates at the lowest rates of the year. And we were calling clients, and some people took advantage of it. And other ones said, well, if rates are coming down, maybe we should wait and they'll come down further. Rates did not come down further. They've actually gone back up. And so I have some of those people that still are calling and texting on a frequent basis saying, well, what are rates doing now? And that just really is no way to live. Number one, you don't want to have to think about what mortgage rates are doing all the time. And number two, you don't want to pay more than you have to on your debt. And so when you try to make decisions to time the market, you tend to do it. It's almost like gambling where you make emotional decisions and you tend to make the wrong choice when you do things emotionally. It never seems like it's the right time to do it. And so trying to time the market really is a bad strategy. The right strategy is to look at what's available now and ask yourself, is this saving me money? Is it making my life better? And if it is, then you should just lock it in and move forward with it. Worst case, if the market gets better, we can redo your financing every 6 months or so. And sometimes with very little or no cost. If you want to look at your situation, if you just want to explore options or even just talk through what's going on, I'm happy to help. So please feel free to reach out. I put a link down below where you have direct access to my calendar. So if you want to, you can just book a slot that works for both of us and we'll talk then. But otherwise, feel free just to reach out directly and I'd love to talk with you about it. So thank you so much for listening. And again, don't hesitate to reach out if I can do anything for you.